I think that it's going to start to cause some retail investors to lose a lot of money. Why in the world would you chase a name like that when you know it's going to be on sale in the future? In this AI boom, you've got to be sure that you understand what you own, why you own it, and exactly how long you need to own it. You are going to overexpose yourself to the risk, and if things do start to go backwards, you'll be left in a world of hurt. Losses hurt you more than gains help you at this point. If you retire without an income plan, you're not retired, you're just unemployed.
Welcome to The Big Skinny with Lou Basenese, where we bring you everything in 111. One headline you should probably ignore because the consensus often gets it wrong. One data point that you should pay attention to because the data seldom lies. And one investment insight to improve your bottom line because, let's be fair, if we're not making money together, we're not going to be together for much longer. So today, it is my pleasure to welcome Dale Smothers, the head and founder of RDS Smothers Wealth Management. Welcome to The Big Skinny, in person, live and in person today.
In person, that's right. Yeah. Finally in person.
I know, man. It is a pleasure to meet you. See you all the time on Fox Business, sure, sharing your comments. And I think it's really interesting what you think about the AI bubble talk right now. CNBC is out with the latest headline du jour about this is an AI bubble, and they found some rare indicator that ties back to the French stock market bubble. What do you see? Do you think AI is a bubble? And if not, where do you see the opportunity?
I don't necessarily think it's a bubble in the sense of bubble. You know, the word bubble is scary, yeah. Lou. You think about just 2000, for instance, and there were a lot of retirees that lost a lot of money going back to work just shortly after retiring in the early 2000s because of the tech bubble.
Right.
No doubt there's some air in this bid up higher in AI. There's no doubt. There's some fluff. There's some speculation. If it is per se a bubble, I would say that air gets let out of it easily, not an actual pop. So this is where we think that AI demand continues for the next 2 to 3 years. And the reality is we're probably in the early innings of earnings for AI, not in the later innings. So the idea that there's this scary bubble forming and that everybody's going to lose their investments, I don't necessarily buy into that, but it does pose an opportunity for us to take advantage of this new up and coming technology in AI while also having discipline inside of our retirement portfolios. It's an absolute must. It's what we're talking to our clients about every single day.
I think it's a very constructive view that, hey, yes, it's a bubble. It's inflating. It's not overstretched. It's not about to burst. I am curious, though, as a man who lives in Kentucky, use a baseball analogy. What baseball team is your favorite? Like,
oh, man. I hate to say it, but it's got to be the Cincinnati Reds. Just because of location. I grew up watching, TBS and watching the Braves. I love the Braves. Never get a chance to make it down there to see them. But when it comes to taking the kiddos to the ballpark, it's Cincinnati, just a short drive up the road.
No, all right. As long as you didn't say the Mets were good,
we're not
which they stink this year anyway. So Yankees fans here for life. But let's talk a little bit about that. All right. So it's not a bubble. There is some frothiness. Where are you finding pockets of opportunities? Later, we're going to talk about a specific stock that you like and that you own at the firm. But where do you see the pockets opening up of opportunities in the AI trend? Do you just go in on NVIDIA? Do you diversify from there? How do you think about it with your clients?
I think that the clients that we work with, we own leadership. We are heavy in the Microsofts of the world, especially on these dips that we've seen. We're buying into Microsoft. We like Apple. We've been ringing the bell for Apple for quite some time, and we finally see it pay off. Amazon, these household names. And, believe it or not, a lot of our investors know Amazon because of the smiley face on the front porch. They get home, they have the boxes. But cloud and computing, it's incredible at the potential that we have there. And then AWS, just looking at the fundamentals of that alone, I think you've still got names like Amazon that have a lot of room to run. And there's a name right now that we've just purchased for a lot of our clients, even the clients that are looking for income, because the upside potential, in our opinion, is much heavily skewed.
Income plus AI.
Sure.
Which one is this?
So here's the thing. So Oracle, I think, has capital appreciation, not necessarily for the income piece. Yep. We build portfolios in a risk on, risk off philosophy. That's literally what we call it. Believe it or not, we call it the Mr. Miyagi portfolio. I love it. It's the risk on and the risk off. Yeah. And the idea that we have risk inside of the portfolio, at what degree though? So most of our clients have some sort of risk on, or what we would say growth focused portfolio piece. Yeah. How big that piece is depends on where they are in their retirement journey. But for that risk on piece, we've just repositioned some money into Oracle.
Okay.
We've pulled it from the major indexes. So our philosophy is be heavy on the index, own leadership, overweight in leadership, and take advantage of these names as they pull back. And it's
and you're not worried, because I had a guest on, a good friend of mine who tends to be a contrarian, but a bit on the fringe, swears that Oracle is a great short opportunity in this market.
Wow.
So do you think that presents some alpha on the upside?
Oh,
then, right?
most certainly. I mean, is it Charlie Munger that says just buy names at the 200-week moving average? It just bounced off its 200-week moving average just a few weeks ago. That's kind of where we started to take a little bit of a look at this name Oracle, and it's been bid down quite a bit from its highs. I think we have some potential for alpha, if we use that technical term, in that name for sure. At the end of the day, you've got to be disciplined in what you choose. So we're not talking about going all in on a name like this, but putting a little bit of that portfolio in, or a little bit of your portfolio into a name like that's likely to give you some upside.
So you're talking about 200 moving day averages, fundamental, trades into AI. So it seems like you're blending a mix of fundamentals and technicals. Sure. How do you layer in? We bring up a chart here that shows the mentions of AI on corporate conference calls for S&P 500. Last quarter peaked, hit a record high, I think at like 331. We don't have the tally yet for this quarter. Yeah. I'm sure it's going to be higher than that. What does that tell you? Is that a false signal? Is it a leading indicator? If everyone's talking about it, how do you view that in your investment?
I would view that as a leading indicator. And here's another one for you. It's a pretty interesting fact, is that before the launch of OpenAI, 6% of the S&P 500 market cap was made up of semiconductor names. Yeah. Now, since then, just a couple of weeks ago, I think we breached the 23% mark. As of this week, it could be as much as a quarter of the S&P 500, and over 60% of the earnings this earnings season alone came from AI names. So it is certainly going to change industries across the entire market. And you've got these managers who are talking on their conference calls. There's not a single earnings call that I've heard that hasn't mentioned AI, from Caterpillar.
Yeah, I know, it's crazy.
What is it? John Deere and AI. Who would have thought that these names would be introducing AI, and it's changing the way they do business?
No, we were talking about Walmart's earnings coming up, and I was on the air with a good friend, Keith Fitzgerald, and he was saying that Walmart, which is the last name you'd think about AI, being able to deploy it down its whole stack and logistics and sourcing, operation could be a really big boon for their business and margin. So I think AI goes everywhere. But you brought up another point too. It's not just AI chips, it's chips, right? Semiconductors go from 6% to 23% of the index.
Absolutely.
That's a boom you've got to be invested in. And it turns out one of the stocks you really like is a name that probably most people don't know about, because it IPO'd, I believe, last year, Astera Labs. Yeah. What do they do for people who are unfamiliar? Why do you guys like it?
Very basic terminology here. Yeah. It essentially allows the GPU to communicate between one another. So the chips and the GPU being able to communicate between one another. You think of the chip itself as being the engine.
Yep.
I like the analogy of thinking as Astera Labs building the transmission, what it takes to quickly communicate between chips, for instance. This is a name that we think has some upside potential. Again, it's certainly in our risk on piece of the portfolio, and it's going to have some volatility. But names like this that are allowing even the leadership to be better at what they do in delivering AI, I think hunting for those types of opportunities right now, it's an opportunity that a lot of investors have never seen before, Lou, and we're taking full advantage of it.
Yeah, and it's a name that came public, not unlike Cerberus last week, that shot up to the moon and then started pulling back.
Too far,
Arm Holdings did a similar thing. I mean, there's a very definitive pattern there with those names. I mean, when did you start purchasing it, and what do you think the upside is?
Yeah, here? I think, well, our purchasing started about a month ago. So we just started to get involved in this simply because IPOs tend to essentially outbid the retailer. I mean, it becomes a bubble. You talk about a bubble. It's a very quick bubble that forms after IPOs. And I know we're not there yet, but SpaceX may be another one of those. Long story short,
we'll go back to that.
We don't buy that retail bid higher. And then when it pulls back, think of the fundamentals, what they do and how they're going to help this industry, and AI being able to essentially be delivered more efficiently. We like this name here again as a small portion of the overall portfolio.
Yeah. If you haven't noticed, we're all about all filling, zero fluff. And so is our email newsletter, where we deliver insights, one headline that you should probably ignore, one chart you should absolutely pay attention to, and one investment idea that you should follow to increase your bottom line right alongside ours. So if you're not signed up yet, go to thebigskinny.com, sign up for our newsletter. If you can't be bothered to give up your email address, that's okay. Give us a follow on Twitter or on YouTube so you never miss another episode.
Before we run, let's get to some other topics. You hit on SpaceX IPO. Is it going to be a pop or a flop?
Yeah, it's going to
And maybe both.
There you go. That's a good bailout. It's going to be a pop for sure.
Okay.
And I think that it's going to start to cause some retail investors to lose a lot of money. And I'm afraid of that. That's my fear, is that retail investors are going to get in after all the, here's the unique thing. And I don't have the statistics behind this. Maybe we can find that and share it with listeners, but IPOs are different now than they used to be even just 10 years ago, because companies are staying private much, much longer, and being able to access those funds private. And then eventually, especially like a name like SpaceX, it's been talked about for now at least 10 years. I mean, you think about that. I remember just 5 years ago, someone saying, when can we buy SpaceX? That's bizarre. And now we've got farmers in the state of Kentucky that are calling our office saying, how do we get into SpaceX? Because it's all the news.
That's got to be a great contrarian indicator, though.
It certainly is. Yeah. And so why in the world would you chase a name like that when you know it's going to be on sale in the future? And that's what we're telling people right now is, I think it's a great company. Yep. I definitely am a big buyer of anything that Elon Musk puts out. In my opinion, I think he's a genius. May not probably get along with the man if we sat in the room, perhaps, but I tell you,
most geniuses are like that.
Most geniuses are that way. Yeah. So when you think about that particular company, I'm not anti SpaceX. Yeah. I just think that you chase money here, or you chase those types of returns here, you're going to start to lose some money, and it's going to put a sour taste in people's mouth, because we got people, again, farmers that have never been in the market before, want to get into SpaceX, and we're trying our best to steer them away.
No, look, I think that's very sound advice. And for the data, actually, it's going to upset you, is probably a University of Kentucky SEC play. The University of Florida professor of business, Jay Ritter, has all the IPO data statistics. Yeah. And to your point, you're exactly right. Like, the companies are staying private for way longer. Mm-hmm. We saw this happen the opposite back in the dot-com days, where they were only like 4 or 5 years old and coming to market too early. You're coming to market too late now. What do you think about Mag 7? I've described the Mag 7 as a boy band that's broken up, because you used to be able to just buy them as a band, right? And you do well. And now you have to be a bit more selective. You talked about Amazon really liking that. Microsoft, Bill Ackman finally, is bringing a light on that. I mean, sounds like you've been in it already. Which ones do you think are the leaders versus the laggards in the Mag 7?
Well, I think we could probably just pick the laggards. I've never really been a huge fan of Meta. Believe it or not, and we've missed out. Unfortunately, we missed out on some returns there, but this is going to go to a point that we're going to make about knowing exactly where you are in your retirement journey, and not getting, let's say, defeated by the greed monster, right? And the idea that, Meta has done very, very, very well for the last few years. It's made me out to be someone who maybe missed the train, but I just don't see a lot of intrinsic value in a name like Meta. So we've just never chased it. And that's where we are with Meta. I'm again saying that Meta may be one of those. And then, of course, whenever you look at the overall Mag 7, we've never been, I just said I like Elon Musk, but we've never really been fully in on Tesla. Yeah. We've been in, and then we get out. When it was a car company, I could see it making some money, and then it became an AI
still
company.
A car company.
Well, not really. I mean, now it's a robot company, right?
Right. Yeah, that's what they want us to believe. But it's 90% of revenue still come from cars.
Exactly. That's the thing, is they're trying to pitch the next frontier, but they still are building the automobile, and I've just never been on those two. So we've been heavy on NVIDIA. We've been heavy on Google. Our clients have definitely benefited from Microsoft, especially in this most recent dip, and buying more of those names. I've been a huge owner of Apple and Amazon, essentially since the Mag 7 was formed. And so that would probably be my Justin Timberlake, if you want to think about the boy band analogy.
Look at you guys. Like, I don't know who Joey Fatone is, but but I'm like you. I've avoided Meta because they put profits over principles. For me, it's not been is the business sound? Is it undervalued? Is it growing fast? I don't think Mark Zuckerberg has a compass. He doesn't. He's just going to make money no matter it doesn't matter what it costs the user. So
you're right. And to that point, you've got to believe in the mission of the man at the helm.
Yeah, I agree.
And so, there has been, funny enough, and I'm not going to necessarily tell you what side of the aisle I'm on, but I wasn't totally upset that the current administration picked Elon Musk. I'm pro Elon Musk, but when politics got involved is when we got out, and we've been a benefactor for that.
Yeah, you can stay neutral. I named my firstborn Reagan after Ronald Reagan,
but you're not going to tell us.
I can't hide my biases if I try.
No. Well, I like your son's name.
I'm a free market capitalist. That's it.
Exactly.
I'm an independent thinker. Let's move on to just kind of the current, just consternation in the market over the war in Iran, oil prices. How long is it going to last? What's the impact going to be on the recession? How do you balance that with clients? What kind of conversations are you having about oil, the risk of recession, and how you adjust portfolios?
Sure. Up until the end of March, there was a lot of fear around the price of oil. AI pulled us out of that. AI has led the market higher, and it's become very narrow in its correction here. But in our opinion, the price of oil can very quickly take the market lower again. The hype of AI is what's caused this euphoria over the last month, roughly, to pull us into these all-time high after all-time high after all-time high. No one would have ever put that on their bingo card with $100+ a barrel of oil. Just wouldn't have happened. So I think eventually we'll start to look at fundamentals again if this continues for 2 weeks, 3 weeks. If we don't see an end here, I think that noise, it trumpets so loud that yes, AI may still be there,
right?
And AI's potential may still be there, but inflation is going to be the determining factor here. Whenever people are struggling to make ends meet and inflation goes higher, and now you've got a new Fed chair and all of his desires for cutting, all that's put to bed.
Yeah.
There's got to be some sort of day of reckoning. And I think that's when the market starts to have these speed bumps towards 8,000. I'm bullish.
Yeah, I was going to say that. So you think there's
bullish.
Potential volatility. I agree with you. I think Kevin Warsh comes on with handcuffs instead of rate cuts at his disposal. How do we get to 8,000? I mean, is it on the backs of earnings growth? I mean, what's the fundamental you point to that says, hey, I have confidence, even though it might be a rocky road, we're going to get to the destination?
Fundamental is earnings.
Yep.
The euphoria of the animal spirits in AI likely take us there as well. Yeah. So earnings continuing to drive higher, expanded margins continuing to drive higher, and all of that off the backs of this AI demand is likely to take us there. But you've got midterms that we know is going to be a headwind if we're pilots on this plane. And this is what we're talking to our clients about. I mean, because our job is to make them stick with the plane. Right. If you are an investor who's going to jump off at the first sign of turbulence, you're not going to arrive anywhere safely. So the turbulence we're about to face clearly is oil. We could see some turbulence from oil again.
Are you positioned in any individual oil names? I mean, or you just play the volatility to pick spots in other leaders?
So we're heavy index at this point in time, heavy index funds. If we're trying to play the oil, we have indirect exposure there through oil. Not a huge fan of picking the commodity or the oil company at this point in time, because that's going to change in a second, Lou. In a second, those names can move one way or the other. And again, our clients aren't really looking for that. So we're heavy index in that point. And then knowing that oil in itself will bring some volatility in inflation, and inflation spreads across the entire market. So we've got oil prices, inflation, and then midterms. If we sell through that, we're in good shape. And a lot of that's going to come on the backs of AI.
I can't disagree with anything you said. I kind of view the market the same way. So that's either we're contrarians or we're going to be victims for believing the wrong way.
We're flying or going down together, one or the other.
So this is going to be totally unexpected. You've spent a few days here, I understand, in New York City. Best slice of pizza you had and worst experience you had?
Oh man, that's incredible. So we frequent New York City quite a bit, and a lot of it's got to do with Fox Business and that sort of thing. Joe's Pizza has got to be where it's at. But I'm going to tell you something. I had some Little Italy yesterday just off the beaten path. We took a little trip and found some of this Little Italy pizza, which apparently is a chain.
It is a chain, and I would tell you it's in my bottom 10 because the location across the street from me might just be the outlier.
Maybe so.
Some people love it.
The crust at the bottom was it, but it was a ham and pineapple, which surprisingly is very hard to find.
You can't put ham and pineapple on your pizza. That's it. I
love it. Yeah.
No, I love it. So what is the most unexpected? You come here a lot. What do you think people read in the headlines about New York that being here, you're going like, that's not true? Like, where I feel like in investing, that same thing happens a lot. So what do you think that misperception is?
So ironically, we have a podcast called The Retirement Matters Show. And the Retirement Matters podcast starts out with a 5 to 10 minute pause for positivity. And I'm going to tell you something, Lou. This country is more united than the news media wants us to believe. And you come to New York City expecting grumpy, too in a rush, too in a hurry for other people type of people. You don't find that here. As a matter of fact, you see incredible humanity at its heart here. And that's amazing to see. And you've got a blend of all nationalities.
Agreed.
And they all come here. Some are tourists, some belong here, but they're all together, and you feel a sense of community, which is incredible to feel, incredible to see. One of my first visits here, I remember seeing a gentleman who had his ear pods in, And he had no understanding of where he was in the world. And someone who didn't know who he was put their hand out to stop him from walking into oncoming traffic.
Yeah.
Which is amazing because you don't think of that as New Yorkers.
No.
I'm in my bubble, you're in yours, and if your bubble pops, so
there's
be
areas where I can show you where everyone doesn't look out for the fellow man. But I love the perspective of let's focus on the positive first. Put that front and center because look, the markets especially, right, is an optimistic dream because it goes up and to the right over the long term. I don't know many pessimistic billionaires. There's very few of them.
Yeah,
so.
You're right. And I'll give you one more. We went to a fruit market yesterday, right in the heart of the financial district, which is not something you think about in New York City, but there's a lot of parks, a lot of really interesting places to find. It's a beautiful city.
I agree.
And
I swore it off. I left in my youth after graduating high school, and Northern Jersey said I'd never come back. And then 25 years later, funny thing happened. So no, I wouldn't disagree. Joe's, I agree, is top of the list for me.
All right.
I got that. So tell people about RDS Wealth, your own firm. What type of clients are you working with?
Sure.
What's the ideal client that fits your view of the world and how you could help them out?
So, we started out as a South Central Kentucky firm, little small firm, boutique firm that helped retirees. It's where I've spent the majority of my career. I've been in this industry now for about 17 years. You can tell me I don't look like I would have been.
You don't look like that.
I love it. Yeah, thank you. Keep going. I'm
just mad you're younger than me, right? So
I got started early as my father kind of put me into this business on the insurance side.
Okay.
And so what's unique is we provide a perspective of, insurance isn't bad. It just is a tool that's overused, and sometimes it's used in the wrong sense. And so this is where
I love that. So let me pause you for that because coming out of the wealth management business, I would say so many people exploit insurance and retirees to 100%. Just drop a big ticket annuity and they get a big commission 100%. And it doesn't fit the needs of the client.
You're
so
exactly
right. I want to affirm you in that because it's a great focus.
It's a tool, Lou.
Yes.
And this is the thing, and not to get off on this, but we talk about building a financial house, and to say that you would never use a skill saw because it cut your father's leg off 25 years ago would be a fallacy, right? It's a tool. If you use it correctly, it can do the right thing, an annuity in, for instance. But there's way too many people out here pitching high-ticketed, high-commissioned annuities that benefit the client none, and it gets a bad rap. If you use it correctly, it can make a beautiful house for you.
Yeah, I just remember starting out at Morgan Stanley. I'd get a free lunch every day to listen to the latest insurance wholesaler coming in saying, sell this product.
Sure.
You don't understand it, but you'll make $100,000 commission on that.
You don't understand it.
Right.
Yeah. And so we're stewards of those things. And we, as a boutique retirement planning firm, our objective is to go out and find the best in class in all things for the client. But we help clients navigate through this world of retirement, specifically on the income side of the mountain. We talk a lot of analogies if you can't pick up on this, and I'll give you a couple. We talk about climbing the mountain of retirement, and climbing a mountain requires two very successful pieces of this climb: the climb up and the climb down. Yeah. And it's the climb down that becomes dangerous. I've never climbed Mount Everest, but more deaths occur on the way down than they do climbing up.
Interesting. I didn't know that.
I'll tell you this. So I climb steps almost every single day, and I can tell you falling on the way, climbing down is much more deadly than slip and fall on the way up. Yeah. And so it's the very similar thing with retirees. They've got decisions around Social Security. They've got decisions around taxes. They've got decisions around income. If you retire without an income plan, you're not retired. You're just unemployed. If you don't understand what your investments are going to do when the market takes a dip and stays down, you may not be prepared for retirement. And then what do you want this money to do for you whenever you are dead and gone? Yeah. All of these decisions require an extreme amount of precision. And it's very similar to saying, how do you fly an airplane, right? Well, it depends on what phase you're in. If you're in what we would call growth phase, or in the takeoff phase of flying an airplane, just point it in the wind, give it gas, it's built to fly. Yeah. Don't jump out when turbulence hits. And now when we're about to land this plane, Lou, this is where those very precise instrument inputs must come to make it a successful landing. Yeah. And that's what we do here at RDS Wealth. I'll give you one more analogy. And I love this analogy because we're in New York City. First time I came to New York City. And this ties back to where we are in the market right now. I want to stress this to listeners, because we're talking to our clients right now. And trust me, I'm not against making money because we're making a lot of it right now. This opportunity that presents itself with AI is a once in a lifetime opportunity. But I'm going to tell you, if you're not careful, you're going to get concerned with making more than what you actually need because you've never had a plan to see how much you need in the first place. And you're going to overextend yourself with risk. We came the first time to New York City, and I remember jumping on a subway. And I remember I was on the 4 train. I was on the 6 train. Should have been on the 4 train. The 6 train is something called a local train.
Yep.
The 4 train is something called an express train. I stopped at every single stop from Lower Manhattan all the way up till Central Park.
It's a New Yorker's nightmare.
I got on the wrong train. The reality was, as I was driving, or as we were going, rather, I looked outside and I saw this train passing me by. It was going much faster. Now, for me, I should have been on the 4 train. Yeah. But for the ones who belonged on that 6 train, they couldn't get upset just because the 4 train was going faster. The 4 train was going faster because there was different destination in mind.
Yeah.
In this AI boom, you've got to be sure that you understand what you own, why you own it, and exactly how long you need to own it. Because if you're not careful, like we've talked about throughout this entire podcast, you are going to overexpose yourself to the risk. And if things do start to go backwards, you'll be left in a world of hurt.
Yeah.
And you've got to make sure that you understand what part of your portfolio should be turned on in income, what part of your portfolio should be left to grow. And here comes the risk on, risk off portfolio as we build for our clients.
I love it. It's a much more elegant way to view the markets versus Warren Buffett's rule number 1, don't lose money. Rule number 2, remember rule number 1, right?
Yeah.
I think people focus on the upside way too much as opposed to focusing on what's the potential downside here. And I agree with you. Like there's a lot of froth in areas in these AI names. So being prudent.
I would give one more piece of advice here.
Yeah.
When you enter into retirement income phase, it's not about trying to add more commas and zeros to your portfolio. And granted, we love growing the money.
Yeah.
But losses hurt you more than gains help you at this point. We scream that all the time. Losses in the market hurt you more than gains help you. Most of our clients that we work with, they lose 20%. It's going to change the way they live. They make 20%. Maybe they take an extra trip, but it doesn't really change the way they live.
Yeah.
So this idea that you've got to be prudent, you've got to be disciplined. That's our word we've been screaming since the beginning of the year.
Yeah, that usually doesn't sell very well. That's a hard thing, but you're teaching discipline. So I think you probably have a track record there where you can demonstrate to people that is, and that's the things you need to do. All right. So I want to end with one question that I try and I'm a contrarian by nature. So I always want to think, get inside other people's heads. Like what's something in the markets you think could happen in the next 6 to 12 months that no one's anticipating, that, you've been doing it for almost 20 years, understand the nuance that is starting to worry you, or is another opportunity that's bubbling up that you don't think anyone else is paying attention to?
Yeah. The one that I don't think anyone else is paying attention to at this point in time is the idea that, and I hate to say that because I've heard more in the last 2 weeks about this than I probably have heard in the last 2 years since it started, was artificial intelligence is making a lot of people a lot of money, but it could very easily, and I know this sounds science fiction-y, but it could put the human race in a world of hurt.
So the existential threat of
AI. The idea that there is truly an existential threat of AI. When you hear the stories that have been buried, you hear the things about AI. There's an artificial intelligence piece of software that I heard about yesterday that can know when another piece of artificial intelligence is monitoring it, and it will hack that piece of artificial intelligence to give a false report.
Yeah.
It can know, just like a child knowing that its mother is watching, it can know when you as a creator are watching it.
Yep.
And it will give you, we used to think about, hallucinations early in ChatGPT, the hallucination. Now with agentic AI, man, that's a scary little thing there. And
it's the dishonesty.
It's the dishonesty.
Yeah. No, it's funny because I read some studies on like they're monitoring to see whether AI is truthful or not.
Sure.
And there's, when it knows it's being watched, it becomes more truthful. When it knows it's not being watched, it's like, well, we'll just fill in the gap here. Yeah. We'll fudge this a little bit. And it's like parenting. I don't know if you have teenagers. When you got a parent,
not yet.
When you have to parent teenagers, you become an expert of detecting the fine white lies.
Sure.
Sure.
Yeah. And so this artificial intelligence that we see, I'm afraid that our race with China is grow and win at all cost.
Yeah.
And I'm just not convinced yet that artificial intelligence will fall into the hands of the right people, because it is a tool that if it's in the wrong hands, all people will hurt from it.
Yeah. No,
And so just being
well put,
being
and I think
cautious, and there's nothing we can do about it per se.
Right.
Sitting in our chairs.
Yeah, you can't protect your portfolio against the end of humanity.
You
so
can't.
at that point,
That is incredible, because I talk about this all the time. Is sometimes you sound like maybe you're talking out both sides of your mouth. Wait a minute, you want AI to succeed, but then you don't. I think we've got to find a middle ground here to where it's successful and it becomes profitable. But you can't bet against the end of the world, because you only win one time, and even then you're a loser.
Yeah.
Right?
Yeah,
There's
agree.
no way around understanding that AI is going to change the world. We just pray that it's for the better. And put my life, my soul, my everything that I possess is in a higher power.
Yeah.
And just pray that He will continue to take care of me, and we're along for the ride.
Well, amen, brother. Enjoyed the conversation in person. Would love to have you back the next time you're coming through the city.
Yeah.
We'll try. I'll go with you to Little Italy and see if it's the location that's the problem, as opposed to the chain, my friend.
And if you're ever
as long as you don't tell me we got to go to Papa John's, because I have a good friend that came on and swears that I got to try Papa John's new pizza that's applied for a Michelin star, and no self-respecting Italian goes to Papa John's.
How about pizza? How about pizza stock? That's not bad. Have you seen it? Have you
It
seen
is.
Papa
It's
John's
good.
stock?
Yeah,
It's incredible. But no, I'll tell you what, you come, Papa John's, speaking of Papa John's, Kentucky, right? That's where it started, brother. Yeah. And you come to Kentucky sometime and we'll take you out and have a good time.
That sounds like a deal.
Yes, sir.
Appreciate it.
All right, man.
Look forward to having you back.
Yeah, looking forward to it. I'll be back.